You've heard the term stagflation floating around. It's rare, unsettling, and misunderstood. But with Trump's sweeping tariffs rattling the international markets, understanding stagflation isn't just academic, it's incredibly practical and important. It's crucial for your financial health today. So let's quickly clarify what stagflation is, how tariffs might ignite it, and what are the practical steps that you can take to safeguard your financial future. First off, what is stagflation? Stagflation combines two troubling economic realities at once. First, stagnation, which is no economic growth. Second is inflation, which is consistently rising prices. In most economic situations, you're only going to have one or the other. It's rare to have prices rising while the economy is stagnant. But it does happen, and it's a problematic situation for any investor. Imagine running on a treadmill and slowly putting up the speed. You're running faster and faster just to stay in place. There's no progress, but it gets harder and harder. Prices surge, but your income and job opportunities don't. And stocks and bonds stay flat. You're not making more money. You're not keeping up with the rise in purchasing power. This creates broad stress across the economy, which in turn lowers consumers' discretionary spending, hurting the economy even further. With the Trump tariffs creating such a broad and significant cascade through the supply chains, it's a real reality that we could be looking at another case of stagflation. To fully understand the impact of stagflation, let's talk about a historical example. Let's rewind to the lost decade of the 1970s. In the 1970s, oil prices quadrupled under the OPEC embargo. This caused U.S. inflation to reach 10%, economic growth entirely stagnated, and unemployment soared. But because of the unique drivers of inflation, there wasn't much that the U.S. economy could do to get it under control. The Dow Jones Industrial Average sat flat for years, severely hurting investor returns. These economic conditions are absolute max pain. They created an economic stagflation that lasted for years. It severely impacted the standard of living, resulted in almost no investment returns over a 10-year period, and this was only with a massive price shock on a single commodity. So Trump's broad tariffs across everything that we buy run a real risk of giving us major stagflation, potentially turning the 2020s and 2030s into lost decades. So how do you protect yourself from stagflation? I've got another video that I've linked below that looks at some specific baskets of stocks that I'm looking to long and short if we feel a stagflation environment is what's developing. But high level, here's kind of the approach. First, you want to invest in inflation-resistant assets. These are commodities like gold, energy utilities, inflation-protected securities or TIPS, anything that we can expect in an inflationary environment to not erode your purchasing power. If you're investing, you're going to want to continue to look at favorable defensives, utilities, healthcare, and essential consumer goods. They're usually going to outperform in that kind of environment. The one caveat that we have to understand in this moment is that tariffs could shape which companies in those categories are going to be successful. Once again, I've got another video forthcoming specifically looking at a basket for those. Lastly, you're going to want to keep cash handy. These could be short-term liquid cash-like assets, even something like the SHY, and gaining from that yield. And if you're someone who's a full-time investor who has made your money solely based on price appreciation rather than dividends or cash flows or some other form of income, you may want to diversify those revenue streams in case we just chop for a decade. So stagflation is one of the most dangerous things that's on the potential horizon from these Trump tariffs, and understanding what it is important. Understanding how it interacts with tariffs is going to be a whole other challenge. And that's why I have to have multiple separate videos looking at the different baskets of stocks that we would use if we only see a stagflationary environment versus only a tariff environment with no stagflation. Be sure to subscribe and turn on the notification bell so that the moment those videos are out, you have an opportunity to look at them and decide for your own portfolio and financial health what you're going to implement for these potential environments moving forward.